Not sure if you guys have heard the news, but apparently Elon Musk and President Trump are talking about a $5,000 kind of refund check because of Doge savings, which brings me back to the good old Stemi check days. Wow, I have the hiccups. Anyways, so the Stemi check days, and I just want to ask you, what are your thoughts about potentially the government sending out $5,000 to all Americans? Because first and foremost, my first thought is, hey, it's our money first, so give me my money back. I already pay enough taxes, fraud, abuse, all of that. But then I step back and go, wow, have we not learned anything? When we rain down money on everyone, what happens? Inflation. Lots of people, more than you would probably want to admit, take this $5,000 and go shopping. Do you guys remember when Rolexes were sold out? You remember when handbags and shoes and all of those were sold out? Lots of Americans, again, more than we probably want to admit, are not good with money. So sending everybody $5,000 sure kind of makes for a good headline. But wow, do we really want inflation 2.0? Something that I think we should at least think about. Something we should definitely think about. So again, it's interesting. It's not done yet. It's just a proposal. But last time I saw the scoreboard, Doge has saved over $120 billion and counting. So good for them. It's all our money. What else should we talk about? Let's talk about one of the 6 largest apartment REITs. I want to give Jay Parsons a specific shout out. Jay Parsons put a lot of this together, so I want to recognize him for doing that. UDR, top 6 apartment REIT. This is kind of my summary of Jay's summary. Number 1, prioritizing occupancy over rent growth. Again, folks, in apartments, it's rent and occupancy that matters, not high-end rents. So they're going for occupancy. Number 2, started to pull back concessions, meaning we may have hit the bottom in rental concessions. 3, East Coast is best performing region. We've been hearing that a lot lately, especially the Northeast. 21 months in a row of retention growth. What is retention? That basically means people staying put. Landlords really lose money at turnover. And again, they've had 21 months in a row of retention growth. Number 5, low home affordability helps rentals. Yes. They are planning 2 or 3 apartment starts in 2025. That's the second time I've heard that from different apartment REITs. And then finally, labor prices are falling. So that is very interesting. Again, they are looking at tariffs and the like, more on that later, but looks like labor prices are falling. Don't know if you've heard this, but it looks like Trump is planning some massive layoffs. FHA potentially up to 40%. This is all reported by Bloomberg. Bloomberg says FHA could see 40% and HUD could see 50%. They are, if these reports by Bloomberg are true, they are being rather aggressive. Home builder survey again dropped largely due to uncertainty about tariffs. It's estimated that tariffs could potentially raise the cost of building $6,000 to $7,000 per unit. Also, sales expectation by home builders took a major hit. That was the survey for home builders. According to Bankrate survey, 30% of Americans increased their emergency savings in 2024. Good on you. 50% said their emergency savings is actually greater than their credit card debt. That surprised me. Again, this is a Bankrate survey, so maybe they are, surveying folks in the financial market. I went out digging a little bit. According to AARP, 53% of U.S. households do not have an emergency fund. That is not good. We did get an update on mortgage applications, and they fell 6.6%. They were forecasted to be flat. Last week, they were up 2.3%. So again, rates over 7% are doing what I expected them to do, reduce demand. It is interesting to note, shout out Lance Lambert, Resi Club for this. 30-year mortgages yesterday, 7.02%. Last year, 7.12. So again, rates are lower now than they were a year ago. I don't think a lot of people would believe that. We did get earnings from Toll Brothers after hours yesterday. Toll Brothers had a nasty report, missed top line, missed bottom line. Average home price, though, is $925,000. Talk about not selling to the entry-level buyer, first-time home buyer. If you're buying a Toll Brothers house, you are not a first-time home buyer. $925K, wow. Looks like they sold nearly 2,000 homes at 1,991 for a total of $1.84 billion in home sales revenue. They did sign 2,307 net contracts in the quarter, which is up 12% year on year. So again, a net contract does not equal a sale because they can be canceled. But again, they were up 12%. Shout out Mike Simonson for the weekly update on what is going on in our MLS. Unsold homes on the market, 638,000, up 1% week on week, up 29% year on year. 57,000 new listings, up 8% year on year. 60,000 new pendings, up 5% year on year. Total pendings, 304,000, down 3% year on year. 33% of listings have had at least one price cut. That is higher, much higher than normal. And then finally, will home prices go negative this year? They could. It's all about supply and demand. They are certainly going to go negative in Washington, D.C., I believe. But will that be enough to go negative across the country? I suspect we shall see. Let's shout out 3 people who joined school. I want to shout out Ian, Joanna, and Paul. Thank you for joining school. Thank you for introducing yourself. Make sure you get to level 2 and level 3, unlock all of those goodies. Again, folks, if you like the ORAD event in Vegas or you wish you were there, you should join school because that's what I'm trying to foster on a daily, weekly, and monthly basis. Try to keep the good mojo going. And lastly, I want to thank Dylan. Dylan went to my website, onerentalatatime.com, and picked up a couple of hats. So thank you for purchasing some swag. Since we're doing some congratulations, let's thank Dan or congratulate Dan for getting his next deal. Dan, congratulations. Sorry I missed it. Thank you for reminding me. Dan, your card will go out in the mail. And guys, I'm sorry I have the hiccups, which I don't know if you can tell or not, but it's very distracting for me. So I can only imagine what that is for you. We got some Fed speak. We got Fed President Daly saying GDP growth and labor market are solid. Fed President Hawker saying the labor markets are largely in balance. Don't know if you guys enjoy In-N-Out. In-N-Out Burger, obviously very much a West Coast franchise or West Coast fast food. Looks like they too are leaving California. They are leaving California for the great state of Tennessee. More people, more companies leaving California for greener pastures. Housing starts and building permits came out today. What's going on there? Housing starts disappointing to the downside. Last month, 1.52 million. Estimated 1.4 million. Now 1.37 million. Building permits, slightly positive. Slightly more than expected. Expected to be 1.46. Came in at 1.48. So a slight miss. Zillow is out with a new price forecast for 2025. They are now saying home prices will be up 1.1%. Folks, I call that flat. And let's also be clear. I think this is important. 1.1% is nominal home price growth. A 1.1%, if it happens, will likely be negative in real terms. What does that mean? If inflation is 2% and home growth and home values go up 1.1%, if you adjust for inflation, they actually went down 8.9%. We did get Nikola filing for bankruptcy. This has been long rumored. It finally happened. Nikola files for bankruptcy. They were once valued at $30 billion. Can you believe that? Crazy. And then the last thing I want to give Jonathan Gray. Again, Jonathan Gray is one of the 4 people I put on my Mount Rushmore. Blackstone's president, Jonathan Gray, says U.S. office valuations have hit the bottom. U.S. office valuations fell 50 to 70%. And now it is time to go. And if you don't know what 50 to 70% is in context, let me remind you that single-family homes from 2006 to 2012 only fell 27% collectively. So when you look at the entire national office market and you see office values down 50 to 70%, that is a crash among crash among crash among crash. So, folks, there you go. Let me know. I want to hear from you. I want to hear from the audience. What do you think about the government sending a $5,000 quote unquote Doge refund? Is it a good idea? Hey, heck, it's my money. Let me spend it. Makes total sense to me. Or, you know what? Keep it. Pay down the national debt so my kids and grandkids don't have these crazy trillions of dollars hanging over them. And oh, by the way, if $5,000 does show up for every adult or every taxpayer, watch out for inflation 2.0. Again, have we not learned anything? Was it Ben Bernanke or Alan? I think it was Alan Greenspan talked about when you rain money from helicopters, we can get inflation. Oh my goodness, I couldn't imagine a $5,000 check showing up. Man, let me know in the comments below. Love to hear from you. Sorry again about the hiccups. Hopefully it wasn't too annoying. Hopefully I can get this behind me. Take care. Oh gosh. Take care. Have a wonderful day. Like, subscribe, comment. Later.